My name is Naeem Azam. I work as a chief market analyst for Evertrade. I am the head of all the research that you read on a daily basis on Evertrade's website and on platform. So it's a pleasure to be with you guys, and thank you so much for coming out and taking the time out to attend our webinar. So in a series of questions, first of all, please let me know if you guys can hear me perfectly. So if you can hear me, just say yes, or perhaps no if you can't. Okay, great. Okay, I see that some familiar names are already there. Okay, so folks, I just wanted to go through this very quickly because the checker of the ex-chancellor checker is the checker of ex-chancellor is speaking right now, if I can get that right. And there are some really big moves happening in the currency and in the FTSE market and in the share prices as well. So I really kind of wanted to go over that very quickly before he stops speaking. But I just wanted to ask you 3 questions fairly quickly. So please let me know if you guys have attended any of my previous webinars. So if you have, please say yes. Okay, so again, the very familiar names are there. Okay, so right. But I see that there's still many people who haven't attended these webinars. Okay, so for those of you who've been trading for less than a year, please say yes. Okay, and for those of you who've been trading for more than a year, please say yes as well, or let's say more than 2 years. Okay, great. Okay, all right, folks, the reason that I ask you, as always, it is important for me to know that what sort of a crowd I'm dealing with so that I can really break down the analysis on that level. So let me just run through some housekeeping stuff. So first of all is obviously a disclaimer. So anything which we'll be discussing in this particular webinar cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, in order for you to contact me, you can contact me via Twitter. The Twitter handle is right in front of you, and it is absolutely imperative if you guys are active trader or if you guys are passive traders that you are on Twitter, because as always, you know, it is for any sort of a breaking news, it comes out straight on a Twitter much faster than you can get anywhere else, and I'm going to just show you the evidence of that because the Chancellor of Exchequer, Sunak, is speaking right now, and then he is announcing the budget for the UK's economy. So it is quite important that how those headlines are really going to move the not only stocks but equities like the indices and of course the forex market as well. And if you are trading any of those equities and if you're indices or forex pairs, then you may be wondering why there has been such a big move, and then before you know it, that the only reason that happened was because there was some news which you are not aware. But if you are on a Twitter and you are following up, then it is highly likely those push notifications are going to pop up on your mobile phone straight away as they happen, because I tweet very regularly and then I tweet all the important information, so you won't be missing any of that. And then moreover, it is quite good for you guys to get engaged, to get involved, to catch us on Twitter and then have that conversation going. And in terms of our daily content, we produce 2 different videos on YouTube. First of all, it is your fundamental video, and that video is basically an overview of what is going to happen in the market, so discussing various different price actions for different indices and stocks sometimes as well, and of course the macro outlook for the economy and the major factors that are likely to move the markets on that particular day. Now, very quickly, I'm going to run you through where are the Twitter, where is everything in relation to that. So what you can see right in front of you is, as you can see, this is my Twitter handle. And I just wanted to show you the recent tweets that we have done. You see, like the UK announces nearly 9 billion of a job retention bonus plan. So now initial 2 billion made available for Kickstart program. Like these are very, very important news. And the second important news was the UK has cut its VAT for hospitality sector to 5%. And again, this is a temporary measure, but it is very important. So if you are trading the utility the hospitality sector and stocks like IHG, the hotels or anything like that, that is obviously going to have a pretty big impact on that because the VAT is reduced. And then this is the video that I'm really referring to. Similarly, you will see a lot of similar stuff on EverTrade's platform as well. As you can see, that the video is there as well, and some other nuggets will also be on this one. Again, get involved with the various different conversation, and then please make sure that you are only following up the verified account, because EverTrade's account is verified on Twitter. With respect to EverTrade's YouTube channel, so this is the channel over here. You can, this is what I'm really referring to. So the technical analysis videos along with YouTube videos, they are both posted on a daily basis. So please stay stay tuned with them. So make sure that you know what exactly is going on. So here we go. What I'm just showing you guys right now is a Bloomberg platform, but it doesn't really matter. All what you would have over here is, again, your Bloomberg television, which everyone has an access. But the most important one is that these tweets which are really coming. So you can see that the UK to cut weight VAT on hospitality tourism sector to 5%. And if we look at some other important news, again, so like economic measures announced total for 30 billion, which were announced today. Sunak says, he's the Treasury Secretary, says the meal discount up to £10 per person. Again, these are very, very important. So the stamp duty one is the most important one with respect to the UK, because now they have changed the stamp duty rules. So the UK stamp duty cuts to run to March 31 and 2021, and stamp duty cut to this is again the same news. And then UK to cut on home purchases. So the current limit, which was much lower, has been increased to £500,000. So this is very, very important and encouraging news for those of you who wants to buy anything with respect to houses or anything like that. It's very important. So let's quickly go on to platform on MT4 platform. Again, this platform can be downloaded from our website or from EverTrade's website, evertrade.com, and you can see that we are seeing this massive move on the back of that. The sterling price has really eased off from its highs when he started to speak, but before that we've seen this massive rally to the upside as well. Again, this is a pretty big move because the prices started to move from 125 and went all the way to here, and then now we are retracing once again. And if I look at the FTSE 100 index, so all what you do is, if you wanted to look for a FTSE 100 index, you have to look over here, and then you will see it, and then drag it back over here. So you can see again the FTSE 100 index is also showing some really good reaction with respect to it. So what we're seeing is more of a overall move is to the downside. So the market isn't really that much happy with the news, with the measures that they announced, because obviously the market was expecting a lot more measures from the Chancellor of the Exchequer. They want more fiscal support. They wanted to have a more and more support from the government in order for the UK economy to really go out, especially when the Brexit chaos is also taking place, especially when we have a Prime Minister like Boris Johnson, who keeps on threatening the EU and the biggest economy of the EU, Germany. And in his recent statement, as we said earlier in our morning notes, that he warned Germany that, look, we are ready to leave the EU without a deal as well. I don't know what exactly he mean by that. I mean, leaving the EU without any deal is no short of a disaster, really. So if he's trying to really strong arm, and really trying to show himself as a powerful person, I don't think that is really the right approach in this particular under the current circumstances. So obviously we're seeing some sort of a retracement with that. Now I just kind of wanted to show you that how market really reacts to these things, and then how the reaction is really, you know, important for these markets. Now if we look at some of the housing stocks, you will see a lot of movement in that as well, like Barris, but and then Berkeley Group, and of course the Rightmove Group. But again, we're not going to go into much of the details in that, because we're going to keep it at the index level and the stocks that we really want to discuss. So let's go back to our main agenda for the day. So after, I hope that you guys have taken note of these Twitter channels. So please do kindly follow and ask me as many questions as you can. Here is a Twitter handle for myself in front of you. So for the agenda today, folks, carrying with this webinar forward, we are going to look at how to measure indices before we go really into stocks. And we are going to look at sectors. What are the really good sectors with respect to any of the index that we really want to trade, and special sectors under the current circumstances where the big opportunities are. They are obviously your energy sector, your tourism sector, tech, and banking sector. There are a lot of opportunities with that, and then of course there are so many stocks right in front of you, which we will try to cover as many as we can as we go along, because we don't have too much of a time, but we will do our best to cover as much as we can. So now, in order to measure the strength of various different indices, so why don't we start first of all with the Dow Jones index, right? So I'm going to explain this only once, and then because the concept is going to be very much the same for the rest of it. Now when we look at the Dow Jones weekly chart, we will always begin with the weekly chart. In order to measure the strength for the three different indices, the Dow Jones, the S&P, and the NASDAQ, we are going to measure them with respect to their moving averages and where the price is really trading. Once we have identified which index is the best performing index, has the largest momentum, then we know that, okay, we are going to pick up a stock on the long side on that particular index. And once we have identified the most weakest index, then it is likely, you know, that the stock that you are looking at from that particular index is going to drag the most to the entire stock market to the downside. So that is where we really the approach that we are going to look at. So when we look at Dow Jones weekly, first of all, when we look at the chart, is we measure the move with respect to its moving averages. So this is your 200 week, this is 100 and followed by 50. Currently, the price is in battle with its 50 and 100 week moving average. Obviously, we haven't won the battle yet. We can only win the battle when the price breaks above any of these two indices. But one good thing that has happened so far this particular week is that this week's candle has formed a higher high as compared to the last week. So this confirms us some sort of this gives us some sort of an indication that, look, the bull momentum is still there despite the fact that the prices haven't crossed above them, right? Now we're going to do the same one with the S&P 500 index. We're going to go onto the weekly chart and we're going to look at the price action. I'm just going to delete the extra indicators which we really don't need, and that is your Bollinger Band. So we are going to look at the price with respect to its moving averages. Now, when we look at the price with respect to the moving average, what we can see is that S&P 500 index is clearly above its all the three important moving averages. So that is clearly a better index. It has a more strength because the Dow Jones index is still struggling with these two, but the S&P 500 index, as we mentioned many times before, is a better representation of the whole stock market, has cleared these two, and of course it is trading above this one as well. So this is a positive sign. Now we do the same thing with the Nasdaq 100 index, and what we see from the Nasdaq index on a weekly time frame, that this index is in a completely different territory. This angle of this price action the way that the price is exploding is pretty much a 90-degree angle. So if you draw an angle like this, if you have an angle like that, then this is your 90, this is your 45, and then this is your 0-degree angle. So with this one, you can pretty much say that the moves have been so explosive that the Nasdaq is in a completely different territory. It is it's just exploding to the upside, and it is well away from all the important moving averages. So what we have formed an opinion from by looking at the three different indices is that the Nasdaq is the strongest index. So if we are looking for a stock that to go long, then obviously this is your Nasdaq index, which has the momentum and a lot of conviction with respect to the traders. And then it is your S&P 500 index, and after that it is your Dow Jones index, right? But obviously Dow Jones index is your weakest index. Now if I look at the FTSE 100 index with respect to its weekly chart, we can see that the FTSE 100 index is in fact even more weaker than the Dow Jones index, because on a weekly chart it is trading well below all the three important moving averages. Now if I bring the DAX, another European index, which is your DAX index over here, and then do exactly the same comparison on the weekly chart, what we can see is that the DAX index, despite Boris Johnson's threats to Angela Merkel, the DAX index has performed quite well. In fact, the price action for the DAX index is very similar to the S&P 500 index, because the distance between the price and the moving averages is more or less the same. But when we look at the FTSE 100 index on a weekly time frame, this is the weakest index among all the four indices that we have discussed so far. So does that make sense so far for you guys? Any questions so far? Okay, great. All right, so now we are going to shift towards the second part of this webinar, which is obviously now we have determined which index is the strongest index, and then we know that if we're looking for a stock to go to the upside, we are going to look for stocks out of S&P 500. One of the questions that are kind of quite intriguing among many others is, what does weakest and strongest mean for a trade? Okay, so what does weakest and strongest mean? So strongest mean that there is a lot of bull momentum. So if one is looking for a long trade to buy stock, then the probabilities of that trade to become a successful trade are a lot more stronger. If one is looking to short a particular stock, and the stock comes from an index such as the Dow Jones index, which is obviously the the weakest index, the probabilities are very strong for that stock to work in your favor. But if you are looking for a stock to go long, and then you are looking for that stock within the within the FTSE 100 index, the probabilities are very weak for that stock to work in your favor or to continue its journey to the upside, just because the overall strength of the index isn't right there, right? So one of the good things that to trade stocks is obviously it gives you a direct exposure to a company. Now, if you trade an index, you don't get a direct exposure, and that means you cannot gain, so much profit on that particular trade, because hedge funds, or the stock pickers, the portfolio managers, they perform really well because they don't really go after the index. They have an appetite for a higher risk. So what they do is they pick up stocks, really, they go after particular stocks, and then they trade with those stocks, because they have really good analysis done. The way that we have done is they know which index is the strongest index, and then they find the stock within that index, and then they go after that index, right? So someone is saying that they feel that the markets are way overbought and the big correction or a crash is around the corner. What do you think? Is it a safe to buy? So yes, the prices have gone up, but talking about way overbought, if you look, now listen to me very, very carefully. If you look at the percentage of stocks of the Dow Jones, of the S&P, of the Nasdaq that are trading above the 200-day moving averages, that is only 40 to 45%. So only 40 to 45% of the stocks of all the three major US indices are trading above the 200-day moving averages. We're getting very much sidetracked here, but again, we're keeping the topic on, discussing stocks, so I will carry on with this one. So it's only 40 to 45% of the stocks of the major indices are trading above the 200-day moving average. So, I'm saying that the market is completely overbought and the correction is around the corner. We don't know that yet. I would love to see the market recorrecting itself, coming back and revisiting these lows. But the fact is there is so much strength in the market that we are not dropping below important moving averages. And as long as we don't drop below important moving averages, as you can see over here, we are consistently in battle with the two moving averages. And as long as we don't drop below these important moving averages, the chances are that we are going to continue our journey to the upside. Now, anyways, so if you are looking for a tech stock, obviously there's no better stock which has performed more than Tesla. Of course, Amazon is within the same category. So from NASDAQ, with the stocks that we are really going to look at are Amazon, Microsoft, Facebook. These are your heavy tech stocks. Obviously, if you wanted to go long, these could work out very, very well for you. Tesla is again another, sort of a tech stock which has performed really, really well over the past 52 weeks, and of course this year, and over the past 5 days and so as well. You can see that the weekly price action is really roaring to the upside. The price is ripping to the upside. It's like there is no tomorrow. But in terms of traders who practice patience, you may not want it to get in before the price revisits. It's an important area of support, and that important of areas of support for me is between 931 to 962. So right now, with respect to that, there is no really big opportunity over there. Now, when we look at, again, Netflix is one of the Dow stocks, one of the Amazon stock, the Nasdaq stock. Again, your tech, your FANG stocks, very, very important. For this one, once again, the price is ripping to the upside. We are very, very high on the curve. As you can see, that the price is very much in range with this previous resistance levels. Obviously, the price was a lot more higher, as you can see on the curve. Let me just make this one a little bit bigger so that I can see the price level a little bit more closer. So you can see that the price over here was 504, and it has touched this particular level right over here. But the question for us is that where is the important price level, where is the important support level for us to get into the price? And I think the important support level really for the traders who want to practice patience is really in around this level where I am drawing them on the chart. So again, between 397 to 403. I think right now this price is very, very overbought. As one of you guys said, that the prices are overbought. And yes, it is overbought, but the momentum may continue and we may never get to 433. So another level for traders who can stomach a little bit better risk could be right over here which is between 452 to 462. If the price comes over here, that could be, again, another option for you to have a look at it. Now, in terms of Amazon stock, when we look at Amazon, you may wonder why the background is black. That is, I've done that purposely just to show you how to change everything. So you right click, you go over here, background, you make it into white. Now the foreground, obviously these numbers are gone in white as well. You need to change it into black so that we can see the numbers. We wanted to have bar up for the candle color green, bar down, we wanted to keep it red. And then for bear candle, we wanted to keep the color red. For bull candle, we wanted to keep the color in green because obviously we know that green is a good color for the to go to the upside. And now you click OK. So the moment that you do, we have exactly the same charts as the previous ones as we had it in the Netflix. But what we don't have is obviously moving averages. Now in order to put them, click Insert, Indicators, Trends, and then we draw moving averages, right? So first of all, we're going to put a 50 moving average, and we're going to change the time frame to weekly, and then we're going to put another moving average, indicator, trend, and then moving average again. We're going to change this 50 to into 100, change the color to orange because we know our 100 are always in orange, and then we're going to put another moving average, trend, moving averages, and then we're going to change this to 200 and change the color to green. And now we have 3 different moving averages. Now with respect to Amazon, again, it's an all-time high, new territory. We don't know how the price and where the price can really stop from here. So the important area of support from my perspective is really going to be right over here. I think if the price comes over here, that would be a really great trade in terms of, could be a great trade in terms of entry point, but we may again never get to this point. So what is the next area of support that we are really looking at? The next area of support could be between 2,689. 58 to all the way to over here, 2,695. So that could be the next area of support. If the price comes over here, that could be an opportunity to get back into this trade. Now, with respect to the banking, obviously the banks are very, very weak stocks, part of the S&P 500 index, but overall index is very is much stronger as compared to the Dow Jones index. But because the sector, the reason that I'm saying that the banking stocks are very weak, because when we compare all the 12 sectors of the S&P 500 index, the sectors which have performed the best are your communication and the tech sector. The sectors which haven't performed really well are your banking sector, your leisure sector, your travel sector, tourism, all of them. They haven't been able to perform that well. So with respect to Bank of America, when we look at the weekly chart, what we're really looking at, the important level of support is going to be the COVID-19 low, which is right over here between 1783 to between 1888. I think the prices can get here because there is no upside momentum with respect to banking stocks. We had this massive run to the upside, but ever since the prices are breaking to the downside. But again, situation has improved quite a lot as compared to before. So we gotta be mindful of another important support zone. We don't want it to completely miss out this trade. And that next support zone, the important support zone, is between 22 to 22.28. In terms of a resistance, not targeting anything less than 29 right on the top of this particular candle. Now, the next stock that I have for you guys is, within this one, pharmaceutical stock has performed really, really well as well during this COVID period. But fairly recently, we have started to see some weakness in the stock. Again, the potential is there. Now, if you wanted to change the color, I wanted to show you once more. Go to Properties, Background, change it into white. Foreground, change it into black. Bar up, green. Bar down is going to be red. Bull candle is going to be your green. Bear candle is going to bar down, is going to be red. Okay, bear candle is going to be red over here. So bull candle, bear candle, bar down, bar, bull candle, all of that done. Now we have the same chart as before at the other chart. So what we're really looking at with respect to Johnson and Johnson, this is very much of a pharmaceutical play, is that from a weekly time frame we want the price to come into this area of support. I think this could be a good area. If it comes, then that could be an opportunity with respect to the stock. In terms of a resistance, again, really targeting the highs of 150 level in around that point. I think this remains a good area of resistance for the price. So right now, in terms of an entry for Johnson & Johnson, not really much happening there. Now, again, as I said to you, tourism sectors. Now, when we're talking about tourism sector, Boeing sits on top of it because it provides planes to all the major companies, major airlines. Now, obviously, since the COVID-19, we've seen a massive run in the stock price, but fairly recently, the price has started to ease off. Now, if you wanted to see where those important support levels are, the important support level is just below this particular candle, and it runs from here all the way to, let's say, up to 146. If price comes over here, that could be very, very good entry. In terms of a resistance, we're going to target the previous highs, and that is going to be above 200. So between 225 perhaps, or 26 to all the way to 235. The immediate support level could be for the price action just below this particular candle, so that could be 165 all the way to 169, but we don't know if that can really act as a good level of support, but the support zone is really there for you guys. Now, in terms of Goldman Sachs, the story is still very, very similar to what we have seen in Bank of America. This is a stock within the banking sector which hasn't performed that great. We've seen this massive rally, but now the price is giving up most of its gain. The immediate support level in terms of a Goldman Sachs remain at 187, runs all the way to 190. In terms of a resistance for this one, it runs between 221 and goes all the way to between the 200 week moving average to 217. So that's what I'm really looking at. In fact, if you are buying the stock in around this price, I wouldn't even mind to target 250 level because you don't want it to come out anything before that. This could be just some sort of a small profit taking zone, but this area is really interesting area for it. So if the price comes into this area, this can really help for traders to get back in shape and really start their journey to the upside. All right, folks, time to ask a few questions before I wrap up the day. Okay, someone is asking, sir, can you look at Tesla? Yes, sure. Tesla is very, very important stock, ripping to the upside. We've done that at the beginning of this particular, when we started to look at it. There are the price levels. If you are looking for an entry, I think below 1,000 is a good entry point. But after that, I think there is not really a good entry point. There's a lot of risk in that stock. Okay. I'm just going through some of your questions over here quickly to see if there is anything that is very, very important for me to answer. We've done the FANGs, we've done Tesla, we've done other stocks as well. All right, folks, I think this is pretty much it. It quite nicely brings us to the end of webinar. This will be recorded. This is recorded and this will be uploaded to our YouTube session. So please have a look on that. If you have any questions. Now, there's a question coming about China A50. Folks, I think I will do a separate video on a daily basis. So let's have a look on that later on. All right, thanks ever so much, and have a good day.